Hi everybody and welcome to the Forex.com weekly update with myself, Kathleen Brooks, for the week beginning Sunday, the 15th of July 2012. Well, the week that's just been gone was marked by a few things. Number one, the euro dollar really declining. Number two, obviously Italy was downgraded. We got the Fed minutes, which suggested that there may not be any more QE on the cards unless the economy gets materially weaker. And then we had that much better than expected initial jobless claims for last week, the lowest level since 2008. That was 4 years ago. So a lot for the markets to chew over. And of course, the Eurozone debt crisis is still going on in the background. Now, looking forward, what are we looking at into this week? Well, oil on Friday, so Brent crude oil on Friday, went through a really important level. Now, look at that. So, interestingly enough, the commodity space, especially oil, did incredibly well last week. It really recovered strongly. As you can see there, it's really been going for it for the whole of July after bottoming there, but kind of below 90. Well, it got above 101.50, which is a really important level and does set us up for further gains as we start a fresh week. 101.50 is the 50-day moving average. Now we look above there, currently at the close on Friday or midway through the Friday session in Europe, Brent crude oil was trading about 102. Remember, traditionally on Friday the 13th, markets do trade up, so that was no surprise there. However, now that we've got above that 101.50 hurdle, we really think that it opens the way to 105, certainly in the near to medium term. Now, what's driving oil and what's not driving elsewhere? Well, the overall commodity space has picked up, especially hards and softs. Added to that, we also have the threats from Iran, the blockade on Iran. So there's a few supply issues at the moment as well. But remember, the oil price has been a lead indicator for the market. So it's very interesting that it continues to extend its gains. Gold hasn't fared as well. It still remains very range bound, and we expect it to remain that way. Now, the first resistance level of note, 1590, and then we go to 1630. They're two key levels on the upside that could thwart the bulls. However, we believe that oil may do better than gold in the medium to long term because gold is so sensitive to deflation fears. So for as long as there's weak global growth story, that could really weigh on the gold price. Now, looking forward for the oil price next week, we have got some important data coming out of the US, including CPI, and in Europe, you've got the ZEW survey, so that's a really good sentiment survey as well. So there's a lot of economic data to chew over, and especially in this environment where global growth is being scrutinized, that is quite important. Now, the other chart that I'm going to show you is euro dollar. This is a long-term euro dollar chart. Obviously, the big theme of last week was that decline in euro dollar below 122 at one point. Now, 121.50 is a really key level, but as you can see, we're getting very close. That's a very long-term chart in front of you. We're getting close to some significant 2010 lows around about that 120 mark. Now, it seems like 120 we are going to hit, but going forward, if we're going to extend declines on the downside, we're going to really have to see the Federal Reserve come out and rule out QE completely. And right now, we can't do that. So going ahead, yes, there may be some downside in the short term for euro dollar, but potentially below 120, we may see the bears start to lose their grip just a little bit, and it could start to attract some sellers. So do watch out for stickiness around that level. But overall, thank you very much for watching and good luck trading this week. Thank you.